It's great to have you back, first and foremost. But it was a good weekend. I mean, we're preparing for what is supposed to be like a generational snowstorm here, so that should be interesting. Um, but yeah, it was a good weekend. Had a couple of like dinner parties with friends. Got out of the house a little bit because I plan on just kind of starting the hibernation here in the next couple days.
Sure.
Watched some football today. They got a Bears win. It was disgusting to watch, but it's good that we got it before this time slot because last weekend was a little bit dicey, or weekends ago was a little bit dicey with the Bears game on in the middle of that.
The Knicks game's on right now, and I thought it'd be my saving grace, but the Jets pulled it out somehow today. Not sure
Justin
why I'm putting.
Fields looked amazing. I think he had like 40 yards passing or some disgusting stat.
A lot of you guys told me when we signed him, they're like, "You're going to hate everything about this. There's
No,
nothing that you're
it's
going to enjoy about this process." And yeah, it's been awful. But hey, first round pick, number one overall coming up, so that's something to look forward to again.
I think you have two draft picks, don't you, in the first round?
We're going to have a ton. I mean, over the next 2 or 3 years, I think we have seven total because of all the picks we've hauled in from the trades. So,
Okay.
we traded our best two defensive players and we win this week. So,
There we
who knows
go.
how anything works. But Nick, more importantly, I know that you've been texting me about this week, and it's day 40 of the government shutdown.
It was a little bit surprising. I will say, like on the price action on Friday, because Friday was a wild day. That was one for the ages. I mean, the reversal that we had in the equity indices was just awesome, and the vol crush into the close. Volatility getting below 20 into the close, it kind of signaled that something was happening this weekend. There was going to be some sort of pumped type news, and you got a little bit of it. The government shutdown kind of walk back that seems to have happened really mostly today after kind of the airline shutdown on Friday and Saturday. And then you had the $2,000 stimmy checks coming through, the tariff stimmies, which is another interesting. I saw that face. You don't like the tariff stimmies?
What are the tariffs for at this point? What are they for, Nick? If they cure cancer,
It's all for show.
do they help get the wrinkles out of my clothes? Because it seems like they do
I
everything
mentioned
now.
this with Jay. They really are. It's a great headline, but it does seem like that is the next shoe to drop, is the tariffs being taken off the board. That's kind of or at least like dulled down to basically nothingness. That I think is kind of the next thing that's about to drop. And all those things I feel like are bullish. You have all the sentiment gauges of like, everybody freaking out into the move that we had lower, and you have, record short interest. You have Michael Berry tweets. Like, it's all setting up for the 7,000 mark, and you know that you and I have both been waiting on that beautiful candle.
What's so interesting about the tariff checks is that it would require an act of Congress. And of course, government's not open right now. Congress isn't doing much of anything. So to me, it's a game of Trump saying, hey, listen, had the Supreme Court not struck down my tariffs, I would have been sending all of you a $2,000 check.
Oh, that's a good angle. I didn't even think about that angle. So he wins either way. That's a win. Like, and if it doesn't get sent out, he can blame the government shutdown. The Dems are keeping you away from your 2K stimmy.
I have sent you a check by now, but the government's not open.
Can't send them out. That's a good angle. My God.
But markets here are opening. It's the top of the hour, 6 Eastern, 5 Central, out to the races. 67.92, it's a 0.6% gain for the S&P 500. NASDAQ likewise gapping up higher by about 0.8%. You have your Dow Jones up by about 0.5%, and then your Russell up by 0.77, Nick. Making our way around the horn, it's a nice weekend for crypto as well, with Bitcoin and Ethereum up. Bitcoin up about 1.5 and Ethereum up 3. Making our way through the gold and silver portion of the world, because that's where I'm most interested still. It's a lot of sideways chop as we hug 4,000 in gold and silver, just slightly higher by about 0.2%. Energy markets here opening up. Oil prices are up, but still meandering around $60 a barrel. Same thing for natural gas, which has had a really good few days here, Nick. And
Mhm.
when we talk with Ilya later and we look at some of the volatilities going into this week, you can't help but notice that natural gas is near the top of the heap in terms of
Mhm.
those IVRs. I'd be curious to get your view on it. But before we get into the commodities, let's keep it equity focused here. You mentioned the reversal on Friday here in the S&P 500 in the NASDAQ. You have that vol crush from 22 down to a 19 in the VIX. Is that enough for you to say that we've seen the local highs and vol and you're back in buying the dip or selling puts? What's your game plan for this week with an IVR of only 21, we'll call it an ES, and maybe 29 in the NASDAQ?
Yeah, and you see volatility coming in again here. It said 1920 down 60 cents, about 3% vol crush just through the weekend. I mean, Friday felt like it was a little bit of capitulation. You had some big moves and some key numbers. I mean, like Mikey and I talked about some of the Mag 7 stocks. Like you had Microsoft below 500. You had Nvidia down in like the 180 handle. The last time we were able to buy that was before the round of AI circular funding that has been going around with OpenAI of
Can you explain that to me? I saw all these memes in recent
did you
weeks
miss that in
online.
your time out?
Yeah. Yeah, that was just, I saw people like, shaking hands with another person who's shaking hands with someone else who's shaking hands with them. And it's like, we're just
It,
washing all the money here, aren't we?
it's
That's
somewhere
what the memes
between.
are saying.
For sure. It's somewhere between like 500 billion and $1 trillion that just like circles around. So 100 goes to here and then it goes to here and then it goes to here. And then all of a sudden it's 300, right? Because each one of those hundreds have just been passed around. But it seems to be never ending. I mean, they're pretty much for the last 2 weeks, it's been pretty much daily an announcement of some sort of partnership. It was Oracle, it was CoreWeave, it was Intel was in there. You had some of these smaller names in there as well. You had like, uh, energy deals with Iren and all that. I mean, like it's endless. The stocks that were getting pulled into it were really incredible. So it seemed to be endless. But to your point, it felt like it was a little bit of a capitulation on Friday. That's how I'm positioned. I am riding the wave here. I like my odds.
Yeah, I suppose that's how I'm entering the week too. Thursday, when I had my brief reentry back into the professional world, I was on overtime with Ilya. And so naturally, as one does, after listening to him pitch the bearish case, I said, I probably should buy some here just because
Oh,
of my
you
natural
gonna throw him
disposition.
under the bus the
First chance
first
I had.
call back, and you're gonna throw him under the bus while he's waiting in the wings. That's
He has a chance to respond and defend himself. But look, from my perspective, right, as someone who hasn't been here and quite frankly hasn't participated in the stock market move over the past few weeks, the technical tenets of the move since May, I think, are still in place. Insofar as every other retest of this little area between our 1 month and 50-day moving average has been an opportunity where if you've bought the dip around there, you've been rewarded even in October, right? Which in hindsight, yeah, that was a pretty bad October 10th. But if you held steady there, you were rewarded. So here we are again, Thursday going into Friday. And now we have a pretty decent reversal candle, that long lower wick. I think that's a level to trade around. So I'm already long here, right? The position was underwater on Friday. It's now back to basically break even. It's simply a long MES position. Now that vol's coming in, though, right? If we're talking about potential trading opportunities and thinking about maybe vol crush isn't the name of the game this week, we go out to 40 days. That's closest to our 45 and 21 out. And the local swing lows, we'll call it what, 66.55. So maybe 66.50. You could look at a short put spread down here, 25 point wide, and you could start to get something that's right around 70% probability of profit. This isn't my cup of tea because I don't like the risking more than 5 to make one on it. But you could start to play with something, even if it's maybe, say, shorter duration, like maybe a 5 DTE working around there. But we have a level to work around now that we're back in the significant technical catch zone. And I think there's a lot of people who see this correction and go 3 to 5%. Why not buy this dip?
Yeah, and I think a lot of the things that I was worried about, like some of the fluff in the market of some of the government stock basket, some of these like kind of lower level stocks that have just been flying around. They kind of took a lot of that out last week. They also, crypto as another thing that I've been keying on for quite some time as like an overnight and a weekend kind of indicator of sorts. 20-ish% move from highs. That's a pretty decent move. Like that's not a nothing move. Like you've had kind of the froth taken out of the crypto market. When you were talking
Sure.
about gold kind of pinned around 4,000 and even silver to some extent, gold and silver have both been kind of choppy, but really the volatility has come out of there. It's almost like you've established kind of the price here for the time being. Like it's not that super volatile risk asset that it was over the last couple of weeks. So I think those are two kind of good things to see in this market, along with some of these equities, like we mentioned, Nvidia. That's a pretty decent sized move. Like that's a pretty good. Like what are you hoping for? 50 points to the downside? I feel like a 20-point move from high to low, 30-point move, 10, 15, 20%. Like that's a pretty big move. Microsoft the same way, going below 500. We're looking at it at 550 a week ago. That's a 10% move. It's not a crash, but it's a buyable, it's a tradable opportunity. And I think that's why I'm leaning so positive on the market here is that, you've kind of taken a little bit of a haircut here. You've scared the children. We've been waiting for that.
Right now, Microsoft, at least that swing low near 490, you kind of have a double top in here near 555. This could just be a range that's getting carved out. Double top only below 490 or so. Risk to reward, you probably got to take a shot on the long side if you're trading there. I know it's only 18.9 IVR, but the volatility in the single stocks right now is not through the roof. Before we bring in Ilya, let's talk about some of the other names that have been drawing interest and maybe some of the earnings plays this week, although it is a pretty thin earnings calendar when I was giving it a glide over. Tesla last week approved Elon Musk's $1 trillion pay package. If you were a trillionaire, Nick, what would you do with it? What are you buying with the $1 trillion?
I think the number is I think the number is so out there that it like the headline is more important than the actual number. Like I don't think you could actually do it. Like how do you the liquidity of that is just way too large to ever be like yeah, like what are you going to do? Buy another massive company or like I don't know. But a host of islands, like can you buy the Bahamas for like $1 trillion? I feel like you probably could. One of them.
Probably. Yeah.
Like, I mean, like, you could get something pretty extravagant there. But I phrased it, and we had this discussion with Vanetta, is like, the upside of shareholders and the normies to have that if that came through, I don't think there's a lot of people that would be angry about it because anybody that held Tesla stock would be, 5x, 6x what it is right now. I think even more than that. And obviously, that move probably comes with Elon's direction. And so, I don't think I think it's more of a headline and a talking point than it is a real problem.
So Tesla had rallied back up towards those highs we saw near the start of the year. At least it punched up to new yearly highs, but not quite clearing the ones from last December. Nick, it's a 21 IVR. It's been choppy for the better part of the last 2 months, even as it's carved out new yearly highs. What say you here at 429 a share? Is this a buy, a sell? Do you trade it sideways or you wait for more vol?
Well, if I listen to Dylan, it's a buy anytime it goes down. So
He's been saying that for months. To his credit, he's been saying that for months.
Oh, I know. I'm saying it in giving him his props on that call. I mean, he has been right for months. I think here it's a tough play. I mean, it's obviously news driven, but I think you have better opportunities. Like the Nvidia going into earnings in the next couple of weeks. Like I would rather put my capital to that on the long side than I would with Tesla. That's the short term. I would look elsewhere. I think there's more pressing opportunities.
Nick, before we get to Ilya, let's talk about these two earnings reports that might move the needle for some folks this week. Cisco coming out Wednesday after the bell. It's a 59.2 IVR right now. Expected move is about $3.50 on what is a $71 stock. So we're talking about only about 5% here. This is not exactly extravagant or through the roof. We also have Disney coming up on Thursday. Disney is coming out Thursday morning. Similarly, looking at an IVR only in the 40s heading into this earnings report. About an $8 expected move by the end of this week on what is a $110 stock. So 7-ish%. Nick, 5%, 7%. These aren't big expected moves for earnings, even though we just saw the VIX pop above 20. How do you square these things? Are these earnings reports worth trading for you? Do you put a little something on to just get some action in, or not enough juice?
I don't think so, but I will say a lot of the earnings, or at least the ones that I've participated in, have been buy the rumor, sell the news type moves. Like I think back to AMD, which had, a $20 or $25 expected move on earnings, and it basically opened inside 2 or 3 points, and it had that massive run up leading up to earnings. I think a lot of the stocks that look like that are kind of good short premium positions. Even like another one that we had, like Amazon was kind of an outside move, but Robinhood was relatively inside the move, at least on the open. When you looked at Palantir was an inside move on the open. I mean, it ended up selling off, but it was an inside move, and it had some price action in both directions there. So it's kind of felt like some of the volatility and especially the upside volatility, where a lot of these stocks have really significant call skew going into earnings. A lot of that move has already been baked in to the stock, and that's what my take has been on some of these earnings.
With respect to the earnings, we had 91% of companies in the S&P 500 report for Q3 thus far. 82% have reported actual EPS above estimates, which is above the 5-year average and the 10-year average of 78% and 75% respectively. This would be the largest percentage of S&P 500 companies reporting a positive EPS surprise for the quarter since Q3 21. That's pretty good. And yet you're not seeing much follow through to the upside. So perhaps that's a short-term sign of exhaustion, which would be bad for my MES position. But who would love if this was a sign of short-term exhaustion in the market? It's one of the worst people I know.
I know somebody.
Absolute.
Oh.
Let's bring him on.
Oh man, Ilya,
I'm glad
sorry,
you stole my thunder, because I was just about to point out to you that, the rosiness, but where's the price action?
That's why I'm setting you up. Okay, so tell me why Thursday it looked like I was an idiot on Friday, right? Because of that buy on overtime. But by the end of the day, this market's recovered. Yeah, I'd like to think that there's something that we should be paying attention to, and maybe the planes not flying is going to get the government to reopen. What's going to move the market this week?
I don't care about that all that much from the upside or the downside, because it didn't seem like the market hated the shutdown. So I'm not sure why they would be celebrating the reopening. It's, I think, kind of a wash. The biggest concern for the markets, when you look where the top on this move in stocks is over just the past week and a half, it's the Fed. It's Fed day. That's the candle. And so, and we haven't been on a trajectory higher since. I think for the markets, the shutdown is better odds that the Fed cuts in December and stays cutting with vigor next year. And if they get the reopening, that's just more worry that Powell was probably going to use the grenade that he tossed out at this last meeting and say, listen, I told you it wasn't a foregone conclusion. Now we don't have this extra impetus of a government shutdown. We need to be careful. We need to see this data now and leave them hanging. I'm not sure they love the end of the shutdown, if it has any bearing at all.
There was a note in the fact set this week about whether or not the government shutdown is actually impacting earnings right now. Mm-hmm. The answer they said is yes. They're seeing that the term government shutdown was cited in 76 earnings calls in the third quarter. This was the highest number of earnings calls citing government shutdown since fourth quarter of 2018. So while it may not be something that we think is necessarily impacting the market, it's certainly appearing in the corporate world as at least something of a consideration here. Nick, I'm more interested in what Powell said about AI recently, given how all of this is unfolding right now. One stock that we haven't looked at is Meta, although Meta really does seem to be falling apart here in recent weeks. Powell said that we're basically getting no jobs growth right now thanks to AI. And then I can't help but think about Trump's stimmy checks comments again from earlier this weekend. And it's like, at what point do you think that we're going to have a market that's basically subsidizing demand because AI is displacing so many people and no politician's going to let that go on for too long? Someone opportunistically will come along and suggest some sort of support program.
For sure.
Is this the most important issue right now for us? Like AI, jobs, way more than the government shutdown?
I mean, that commentary, I think, gives Powell the out to get a little bit more dovish, considering that at the FOMC, it kind of felt like it was a sort of hawkish tone to it. And the fact that they kind of took out a little bit of the rate projection further out on the curve in terms of like the cuts coming up. So I think that gives him an out to be like, oh yeah, look, see, like Amazon laid off, 50,000 people and now we got to cut. It gives him that little card. But yeah, I mean, I think the AI situation is certainly something to worry about. And I tried to tee that up to Dylan, and, it kind of makes sense that there's going to be more stimmies of sorts coming in the future, because you're going to have to do something about it, because it's very clearly taking a lot of jobs. And we see those updates every single day and week of, XYZ company laying off X amount of people, and they don't directly say it's AI, but you can put the tea leaves are there.
Nick, I was in the chat on Thursday.
Here's an interesting thing for you. It looks like the Supreme Court's going to rule against the president's tariffs, maybe, or at least that's the vibe out there, it seems. Now, what is to stop the president, when that occurs, let's say, to say, oh, well, you know how I told you that I'm going to redistribute the tariff revenue? Okay. Now, if only the Supreme Court let me keep doing this. Now, technically, he's supposed to return it to the companies from whom it was taken, I would imagine. But surely there can be a redirect there, and there you go. And then we go to court to fight the legality of the redirect, and I'll see you in a few years.
It's the art of the deal.
Well, it sets up. I ask about the Powell and jobs coming thing because it sets up this interesting lever, in my view, where it's like you get a more dovish Fed, the more AI succeeds. The more AI succeeds, the more the stock market returns get juiced, because you not only have higher earnings because of this benefit of AI, you're also seeing the need for lower rates because economic growth is now jobless, if not job negative. That's a really interesting quandary that we haven't come into before. We're like, oh, we're getting a ton more growth without, and people are losing their jobs as a result of it en masse. So the last week and a half, Sam Altman has been talking about all these ridiculous things. AI is going to be too big to fail. It needs the government largesse to back it up. Why not have federally guaranteed loans?
By the way, that should be a warning sign to everybody when this very successful company that's apparently swimming in money is already preemptively asking for a government bailout. And then you have Palantir's Alex Karp raging on CNBC about short sellers and how dare they sell a company that does such incredible good, which, by the way, I like Palantir. I like Alex Karp. I think it's a wonderful investment as a long-term idea in a deglobalizing world. But from a trader's perspective, the CEO of a company is raging against short sellers on CNBC. Their first thought in my head is, it's the Economist cover indicator in human form. Observe. This will be punished by the markets with viciousness. And then OpenAI wants a preemptive bailout. This is starting to smell like a sentiment thing, which again goes back to this idea: why is the top Fed day? Was the earnings situation bad? No, it was great. And the rewards for positive surprises on average was 0%, according to our friends at FactSet. Whereas the punishment on negative surprises was twice the historical average. This is a sentiment shift.
Yeah.
And signs of it are starting to pop up all over the spots.
No, and we got to give it its credit because that's something I cite on the way up. Like, oh, look, we're being rewarded more than usual. This is a good sign for the market.
That's right.
So when you're being punished more, just the last week. So Powell says we don't know if we're going to be able to cut in December. Like nothing's guaranteed. And then OpenAI is saying that they're going to need government bailout money at some point. Right. That maybe means the AI future is not accelerating as quickly. Therefore, the jobless growth isn't coming as fast. Thus, the Fed's need to lower rates won't be as imminent. And so the market pulls back in.
Places where you've had this massive growth in non-bank credit. So look at BX, look at APO. The places where you have this massive concentration of non-bank lending, those names are down, and they've been down for a while. So you can see the level of concern that markets have implicitly about what happens if rates are not as low as the markets want.
Nick, before we go to the high vol stuff, which I want to touch on here in the final 10 minutes or so, let's talk about the low vol things. I don't recall the last time oil had an IVR of 1, certainly not recently. ZB has an IVR of 3.5. What's your take on how to operate in these spaces right now? Because I know for some folks, while it's not the typical tasty way, when you do have low volatility, it allows you to throw something in a little bit more of a creative bucket to do something maybe a little bit more out of the money because it's cheaper, or maybe a strategy you wouldn't be able to afford otherwise. Do you find any interest right now? Let's just start with bonds because they're on the screen, in either notes or bonds or something like TLT.
Yeah, we've been trading bonds like right around the 116 handle just via short puts. And I know that's, not typically what we do with low volatility, but it was kind of our way of taking a little bit of a directional shot with some room on the downside here. But yeah, we've been playing long bonds around this handle, and also it's just size thing, right? It's a little bit smaller size, at least on the initial position, than just being long or short bonds. So we've been trading them around 116 is kind of where our spot has been. In terms of oil, I have a little bit of long delta there, but it's been a tough trade. I mean, it's back to 60, which is kind of the middle of its range. I've been trying to be, short in the mid 60s, long in the mid 50s, and this is kind of like a just not a spot where I would lean directional. I guess if you wanted to, you could look at something like an iron condor, but oil just hasn't been it hasn't been the flavor of the day in a couple weeks now.
I'm in a short iron condor right now, and oil up at 37 DTE at a 62% profit. You know what? Even though it's a 1 IVR, maybe that's an artifact of just the market open tonight, and it's really back to say 15 or 20. You're still sizing up something that's a little bit inside of 3-to-1 risk to reward, which for me, anything around 65% where I can risk the 3 to make 1. I'm going to take that trade every day of the week. So at 2 points wide, 53.55, 65.67. So short the 65.55 wings, guts, long the 53 and 67 wings. That actually seems quite reasonable to still put on. So if I wasn't in it, would I put it on this week knowing that there's all this government shutdown stuff? Sure. Ilya, could you make a case that if you get a positive government shutdown headline, you get a bounce in oil prices because demand's coming back in, or what's moving this market, I guess?
It might care episodically. I'm not sure that it would care all that much. I think we would have probably had to see a longer term sort of a thing that would start to impact the flows of crude into refining and jet fuel and things like this. And we haven't really seen the kind of thing where you go, oh my God, jet fuel inventory is pouring over the edges because the jets are grounded, right? Like we're not there. We're not close to there. So at this point, would there be maybe some sort of a growthy thing where the markets go, okay, the government shutdown is over, money's going to come back out. That's cyclically a good thing. So energy up, maybe Russell up, that kind of a thing. Maybe. I'm a little bit short here, crude oil. I started getting into USO put verticals around the equivalent of 62 for WTI, so right around 73 on USO at the top of that bounce when
Sure.
it started to roll over, and added a little bit last week because it seemed like it took out a range bottom. So we'll see. I mean, I'm looking for it to basically get down into kind of the low 60s on USO, and we'll see. But if it pops, as ever, I'll be out in a hurry.
Nick, those are the low IVRs, the high IVRs on the board here. And I'm looking through the lens of the futures market this week. There's corn, there's Bitcoin, of course, which you mentioned earlier, but natural gas is at 45. 45 IVR in natural gas seems like it's elevated. It also seems like it means absolutely nothing. So we've had this move where it's up, in the neighborhood of about 20% over the past, we'll call it 3.5 weeks. It's been an astounding run. We're back to a place where the market chopped around a lot. Is a 45 IVR enticing enough for you to throw on a short iron condor or something directionally neutral here, basically playing around the June highs, and we'll call it the October lows, because we're basically halfway between those 2 points?
I will say I usually don't jump on natty gas until my man Thomas, Mr. Westwater, puts me in a direction there. But I know that
That's fair.
you and him will be taking over some futures power hour coming up here in the next week here, right?
It's back. It's back tomorrow. It's at a new time, 1:30 Eastern, 12:30 Central, and then overtime, Elia, 4 Eastern, 3 Central, right after
Yes,
last
sir.
call.
Yes, sir.
Just jumping right back in the saddle.
Gonna be awesome.
Yeah,
Oh, you thought we were gonna leave you on the bench? No,
I have seen
right back
all of
in,
the team's
buddy.
messages. I see the messages where you're sweating. You're like, "Is anyone available to help?" And Elia's like, "I'm sorry, I've got to go to this rap thing in Oakland." And Thomas is like, "I can't."
It's all good.
Speaking of which, I took my kids to the 27th annual International Hip Hop Dance Festival just today. They loved it.
Oh, look at that.
That's not what we did here. We made Mickey Mouse waffles and hung around the house all day. Yeah. All right, guys, we're closing this out. S&P 500 holding on to most of its gains, up by about 0.4%. NASDAQ up by about 0.6%.
You guys think we get the shutdown this week? The end of the shutdown? It's the highest mark on Kalshi. You've got an 18%, so about a one standard deviation to the upside going past the 16th. The 16th is Sunday of next week. Do we get it?
Food is out there saying they're close, like right now.
Yeah. Is that bullish or bearish? What do we think?
Probably short-term bullish, and if sentiment fades it like it's been fading earnings and fading everything else, that'll be a huge signal onto itself. If the markets, I'm less concerned with what it is than what the price action does. And if the price action fades it, that'll be very telling.
I don't know. There's part of me that thinks once all the U.S. economic data comes out, it's just going to be terrible. Given everything that we've seen.
We're supposed to get CPI, PPI this week, maybe even retail sales.
Well, we like to talk a lot about what happens to stock markets after the Fed cuts, and the sole deciding factor for whether or not the market keeps going up or down is whether or not there's a recession. And so, do we want the Fed cutting? Yes, but for good reasons or bad reasons? Of course, good reasons, right? But if it's for bad reasons, because all of this data now that's backlogged is like, oh, zero jobs growth, oh, recession, oh, yeah, we'll get our December rate cut and the market's going to hate it, every bit of it.
Yeah,
so
that's right.
Yeah, if we do get a pop, right? I'm long stocks right here, but if we get a pop on a government shutdown headline, I'd be very inclined to take it. Because once the government data starts coming out, the private sector trackers and the comments from people who keep an eye on this otherwise, they haven't been that optimistic. But you know what? No. That's a problem for another time, because First Call is done. We run a tight show here. I'm not like Tom. I'm not going to let this run over for 10 minutes. We'll be back tomorrow morning. Nick, what time does the show start again over in the UK?
I believe it's 1:30 a.m.
UK. I don't know. Shoot, that's that. But I'm back.
All right, well, it's 2:30 Eastern, 1:30 Central Time. Then, of course, we have our opening bell here. Nick, the bats are on tomorrow morning with Vanetta. You're going to be here at 8 Eastern, 7 Central. So everyone should tune in for Tasty Live. Stick around, of course. Until then, though, good luck trading overnight. For Nick Batista, Ilya Spivak, I've been Chris Vecchio. Catch you tomorrow.
See you tomorrow.